Hey, do you use Divergence to trade? Do you know how to use Divergence when you're trading? And is it of any use to you? In the 30 years that I've been trading, I found that Divergence was one of the worst things I ever used. It really wasn't a great success for me. But that said, it's generally because trading indicators are very unique to specific people. For example, while Divergence might work for you, it might not work for me. It might just be one of those scenarios where I don't use it properly, but I basically I do, and I do know how to use it, but it just never has been a great success. And you'll say to me, but Rob, you always tell us that trading is a 50-50 game. So why are you now telling us that Divergence has never been a great success? Well, some people have an edge in the market which gives them a better result, or it's just easier for you to trade with it, or you just have not much luck with specific kinds of indicators. For example, if you trade the moving average crossover and that's the one that you like and it works for you, then it works for you. If you trade support and resistance like I do and the one that I show you and it works for you, then it works for you. But there's a reason that my edge in the market being support and resistance is better than, for example, the divergences. Divergences don't work for me. Now, for me, I'm going to show you how divergence works and I'm going to show you how support and resistance works as well. So we're going to go to the charts in a little while. But divergence, the thing with that is you add another indicator to your chart, number one, the RSI, when you have to put all the divergences on. And effectively what divergence is the RSI is moving in one direction and the price is moving in the other direction. So it tells you the price is kind of running out of steam. So all the strength is where it should be. So you follow the strength in the market, you're following the RSI. But for some or other unknown odd reason, it seems to fail more often than it wins. And if you were to do a back test on it, on that system, you would actually see that for yourself. And it doesn't matter which time frame you trade it on or which time frame you try and use it on, it tends to have more failures than successes. So while trading is a 50-50 rate, with support and resistance you can manage your risk better and you can control that scenario of the risk getting too high. Now, if you think about it, divergence should fit in nicely with support and resistance because a divergence would normally occur at the end of a price range and that would normally be when you're hitting resistance. But what I'm going to show you on the charts is clearly if you're trading with support and resistance, you're waiting for a confirmation. Whereas on many occasions, price can actually break through resistances and they can break through supports. And that's what you don't see with the divergences. And the divergences tend to let you down. So I don't recommend actually trading with divergence, but I am going to show you how the divergence system works. Guys, trading is risky. It's 80% of traders lose money, as you know, I tell you every week. And if you don't like risk and you don't like losing money, you probably shouldn't be trading. Go down, get your free Forex book. I've got a free Forex book for you down there, which talks about trends. The trend is your friend and how you can trade trends in Forex and how it can help you become a more profitable trader. The book's totally free. Go and grab it. It's in a PDF format. And while you're in the secret blog, just remember, if you're down at the secret blog I put in there a trade of the day every day. It's not trading advice. It's just there as an idea. You've got to really stop following other traders or trying to copy their trades because you're going to be behind the curve if you don't get ahead for yourself. You've got to try and learn from maybe people like me how to trade and how to pick the trades for yourself so that you can be that step ahead and you don't have to wait for me to take a trade before you take a trade. The trade of the day is on a swing trade. It is on a lower time frame or a 4-hour time frame, a higher time frame, let's say. It gives you time to get into the trade. The trade will occur over a period of 4 hours or over a period of time. So you won't be sort of rushing to get into the trade and you won't be late. I try and leave a gap so that you've got some time to have a look at it and see for yourself what is actually happening in the market. It's to help you guys and it's to teach you what I'm doing and then you can figure out for yourself what you want to do. But if you were to backtest divergences, you will find that divergences are not a great trading system. They're not the best trading system to use out there. But if you want to know how to use them and you want to figure this out, then let's go and have a look at the charts. I'm going to show you how divergence works. I'm also going to show you how support and resistance works, the ones we use, and then you can get an idea for yourself what you want to do. But try not to add too many indicators onto your charts because that can become quite confusing. But without further ado, let's go and have a look at how to trade divergence. Let's talk about how to trade divergence. And you know, like I've said, divergence is not my favorite thing, but it's actually really easy. And if you're using these trading view charts, they've actually got a little indicator in there, so you don't have to even draw it in yourself. Fantastic little thing. If you'd like to use these charts, I've left a link for you in my description, and you can just go and use these charts. But to be perfectly honest with you guys, I just use the charts that my broker provides me, and it doesn't have all these fancy little indicators on it. But if you're using this one, you can just go into indicators and you type in RSI, which is your relative strength index. You could actually, oh no, what did I type in there? Oh, weird, man, weird. What did I come up with there? Your relative strength index. Now, oddly enough, you can either just use your relative strength index and add your own divergences in, but this one's actually got a divergence indicator that comes with it. So if you put that in, look, it provides you with the divergence. Now what the divergence is pretty simple. Here's your little positive RSI line showing you that there's a divergence, because if you line it up with the price is going down. And what it's telling you is at this point, you should be looking at the prices overdone. It is not going to go down any further, and you should be buying it. And in this case, it was perfectly right. It did point out the correct trade, and you could have gone long there and you would have got a long trade. It didn't make it all the way, and then it carried on. Now if you were trading support and resistance, as you can see on this particular type of product, I thought, oh, this is gold. That's because I predicted gold. If you look at this, you would have been trading support and resistance anyway. These are your daily levels. You would have put your stop loss below the support, and you would have had your target at the resistance. So if you had taken this trade and it had come back down, it wouldn't have hit your stop loss anyway, and it would have carried on going up, and you would have taken profit. So that would have actually been a good divergence trade. I just want to see something on the lower time frame, and if you go to the lower time frame on this exact same product, you can see here again, here it is showing you a bearish market, that the RSI is going down and that the price should have stopped going up. And there once again, if you line it up, it did come down a little bit and then it went up, and then she went back down again. So even on the lower time frames, it can actually work. But I would like to show you a few cases of where there's been a few failures. I'm not sure if there are any, but I have to say it's failed on me a number of times. Now this particular one, okay, we're on a 5-minute chart. Let's take it up again. Let's take it up to a more readable level so that we can actually see what's going on, and you can see what's going on as well. Make it a bit easier for everyone. There's a Euro, Great British Pound. There's a positive divergence, and once again, it worked. Okay, not bad. There's a positive divergence, and there it kind of went a bit flat, worked, and then it failed. See? So it doesn't really work every time. Because if you had taken this particular positive divergence when this was going negative, you might have actually said, well, I'll take my long trade here. It would have gone flat, 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 gone up a little bit, not much, just a little bit, and then she came down, and then she actually failed. So that's a failure. That's not a good one. Let's have a look if there's anything else here. Great British Pound, US dollar. Let's just see what kind of product have we got here. All right, so there's another divergence over here. You can see you've got a negative divergence, a bear. So at this point, it's telling you to go short, and you would have gone short. Well, it would have been a tricky one. You see now, this is a good example of it might work and it might not work, because yes, you would have got into the bear here, but you would have got nothing out of it really. You're in the resistance level. It's not really out of the resistance level, giving you a clear trade as support and resistance. And on top of which, it actually went and bounced along, did nothing, then came down, and then went straight back up again. So that's actually not really a great trade, but it did eventually find its way down, and it did give you a short. But this one, on the other hand, there's another divergence over here, and you would have taken this one short, and it went long all the way up to there. That's a failed trade. Divergences are not that accurate, but what a lot of people say is for you to be successful with a divergence, your divergence should be within the range. In other words, below the 70, you know that the range is always between the 30 and the 70 in this RSI. And what they say is if it's outside of the range, it's just simply overbought, and you shouldn't look at the divergence in there. You should only take the divergences more like this one, where it's either closer to the range or inside the range, and that's where your divergences will work well. But as you can see, there's not a lot of divergences here, and there's not a lot of times you can trade, whereas with support and resistance, you probably could have traded this chart 4 million times. I would rather look at, if we go back to that gold one that we had now, that was an interesting trade. You see here, you've got your main resistance that we picked up on the day. We're on a 4-hour here, and there's your main support that we picked up on the day. There's another support that you've drawn in on the 4-hour. You've got a trend line running here, and here you can take this trade quite nicely. You can take it long, and if it gives you a positive candle, obviously, you could take this trade long, and it's going to take you up to the resistance level. And it's much easier than looking for these divergences. Look when last you had a divergence, way back here, quite far away, and it's all the way back here, the last divergence. And between all this, you could have taken 1, 2, 3, 4, 5, I don't know how many trades you could have taken here on this product alone, which is trading in a range. And a range like this is wonderful because you get the top, you get the bottom, you get the top, you get the bottom, and there's a couple of trades in here that you can grab. So support and resistance actually works a hell of a lot better when it comes to this sort of thing. I don't bother with these divergences. They're just, as you can see, there's not enough of them, and they're not all successful in any event. Like I say, in the last 30 years, I've had a lot of failures with divergence. So guys, that's the divergence system. That's how divergence works. And really, like I've said to you guys before, in the 30 years that I've been trading, it's never been a success for me. It's never worked for me. It's always been a kind of a, I don't know, a thorn in the side sort of trading thing. I have looked at it, but then I've got this extra indicator on the chart that I don't really want there, and it takes up space, and it's never worked for me in any event, so I effectively just don't bother with it, and I just don't use it. But it has its place in the markets. It has its place. I mean, if you had place on your screens for all these extra things and they didn't affect your psychology, which most extra indicators do. Just remember, if you put extra indicators on your chart and you make a decision, every little indicator that you've put there will try and stop you from making that decision. It'll try and hold you back, because that's what psychology does. Your psychology tells you, hey, don't take that trade because this is going that way or that's going that way, and then you never take the trade. There's always a willing buyer and there's always a willing seller in the market, and the reason for that is because everybody's got their own system, and their own system is telling them that it's a good buy, and it's telling you that it's a good sell. And that's as simple as it gets, and that's why trading is a 50-50 game. That's why we use support and resistance, so that we can manage our risk and control our risk to the point where we know that we're not going to lose money, we're going to win money, because that's what trading's all about, isn't it? It's all about being able to make more on your wins and lose less on your losses. So you'll hear me harp on about managing your risk day after day, week after week, video after video, because that's what it's all about at the end of the day. I actually found that with divergences, I could actually throw a dart at the chart and choose which way it's going to go and have a better success rate than trading with divergences, to be quite honest with you. So divergences, like I say, have never been my favorite trading thing, but I thought I'd put it out there and I'd show you guys how it works, because it does tie up a little bit with support and resistance. It does kind of fit into the project, but don't use it. Am I saying that to you guys? Just don't use it. Yeah, just leave it alone. Walk away. Don't bother with it. But if you want to, yeah, that's your choice. So guys, don't forget, next week, or next video, not next week, next video. In the next video, I'm going to talk about the 3 things that professional traders do before opening any trade. I'm going to talk about those things that professional traders will look at before they actually get into a trade. So don't forget to come back for that one. I think it's going to be on Wednesday again, and that will give you some insight into what you need to do before you open your trades. Guys, thanks for watching. Don't forget to watch the last videos. Till the next one, cheers and bye.